So I don't try to time it. I just own gold, silver. I own tons of gold. I own tons of silver, physical. Okay. I own a lot of miners and just sit. And it turns out that I'm outperforming all these people. So I don't trade the gold and silver ratio. I don't do that.
Surfer, but like to think I'm your best friend. Balances in your bank instead. Hello, I'm Jared, the Stacking Surfer, and I'm excited to bring a great interview to you guys today. I've been speaking with Eric Yeung. You guys can find him on X at King Kong 9888. We've had him on before, and he's a great guest of the channel. And I'm going to go ahead and bring him up here. We're going to be talking about silver today, but Eric is also a great expert on gold as well. So I think we're going to have a few questions in there to talk to a little bit about what's going on with gold, guys. And at the end of the day here, what we're really going to hit is it a good idea to be selling your gold for silver? And we're going to hit a lot of that because I know a lot of you guys have that question. Eric, how are you doing today?
I'm doing great, Jared. Thank you for having me on your show.
It's good to have you. So let's jump into this. I've got a bunch of slides here that you've shared with me, and I'm going to pull those up on the screen so we can look at them. And as we do that, I'd love to get your feedback and thoughts on each of those. And really, there's a lot going on with gold and silver. We've seen a great run with gold, and then a consolidation. And as we were just talking a minute ago, um, you know, it wasn't until really after that consolidation that we started to see the gold miners start to jump. And in my opinion, I still haven't seen the silver miners jump as much as the gold miners. But that's also depends on when you got into the market, if you have any of the miners. But then we've seen silver start to jump up too. But so much of this has to do with the dynamics that are going on in the market. Your first silver slide here. I'd love to have you explain this again. I know you came on previously and hit this, but looking at the LBMA, the COMEX, and the ETF is really important to understand what's happening here and how this drives pricing.
Yeah, so Jared, that's like, that chart right there essentially describes the entire Western gold and silver market pricing mechanism. Okay, that's how they do it. They
Okay.
use the LBMA, the COMEX, and the ETFs to control the prices of, well, gold and silver. I mean, essentially paper price and also the physical price. Okay. And I mean, a lot of people ask me, they say, well, if central banks are buying gold and silver, gold hand over fist, and industries are buying silver hand over fist, why is it that, gold is consolidating? Like from 3,500 bucks, I guess back in February, March, and now is
Mhm.
lingering between 3,200 to 3,400. And silver, I mean, silver broke out from 35 and it hit 39, but now it's kind of like consolidating the last week between 38 and 39 or 37. Let's say 37 and 39, $2, right? So my answer essentially is that as I explained to your audience before, the Western gold and silver precious metals pricing mechanism is not a straightforward supply and demand issue per se, because you have different locations, first of all, where you house the physical gold and silver, right? LBMA, COMEX, ETFs, they are different locations. Although the LBMA and the ETFs share vaults, and then the COMEX and the ETFs share the same vaults, okay? In at London and New York. So, what as
And just to
yes.
clarify,
Yeah.
the LBMA is in London, the COMEX is in New York.
Correct. Yes. And as I explained before, when we see the bankers or the banksters, whatever you call them, when we see them slam the gold and silver prices at 9:38 a.m. each morning, okay, when the COMEX opens, people complain. Like Ted Buffler, he pointed this out. How is it possible that all these banks short selling, essentially just selling, um, close to 500 million troy ounces of silver every day, 9:30. That's like, or
Consistently.
60% of the entire world's mining supply of silver in one
Yep.
hour. Okay? So the explanation that the bankers give us, I mean, actual bankers like Robert Gottlieb, like the guy from TD Securities, right?
Yep.
Daniel Gatti, I guess that's his last name. Anyway, the explanation is that yes, they're shorting at the COMEX. Okay, let's just use a round number, 500 million troy ounces of silver, right? But guess what, Jared? They are long at the LBMA equivalent amount. So they call that the EFP basis trade. Okay, that's their, you know, that's basically what they do to hedge in quotation marks, and they make money from the price differential. Okay, shorting the COMEX, long the LBMA. And when you talk to these guys, they often, well, all the time, pretty much, say that the LBMA is the physical market. But as me and you
Uh,
both know, Jared, that's not really true, right? Like, I
yep.
mean, the LBMA is essentially just a promissory note market. Why do I say that? I mean, let's just use that example, 500 million troy ounces. Well, in reality, last week on Friday, they shorted 480, around 480 million troy ounces in 1 hour on Friday when COMEX opened. Okay, fine. Okay. Well, guess what? TD Security said last week, okay, that um, at the LBMA, the actual free float of physical silver, that's the silver that they actually have that is deliverable. Okay? Not the Phantom of the Opera stuff. Stuff that they can actually get a hands on and deliver. Now, if you switch to slide number 3, okay, he estimates that the free float is 155 million ounces. So what's that? That's like less than one quarter
Yep.
of the amount of silver that they shorted at the COMEX, right? For that 1 hour. Think about that. They're doing that kind of short every day, right? So, let's be reasonable people here. Let's just use common sense. All right. If you're shorting almost 500 million troy ounces and you're hedging at a location that only have 155 million troy ounces of actual silver that is deliverable, it tells me that, you know, when you tell me that the LBMA is physical, it's BS. It's not all physical because it's only partially physical. Fact. Right? Okay? I'm using like the math that they're providing. I'm not making it up. I'm using numbers that they're providing. So what that tells me with just these numbers right here is that the physical silver market is real tight right now. Okay? Just with these numbers. But guess what, Jared? This is not the end of the evidence that I'm going to give your audience to show them
Perfect.
that
Love it.
the physical silver market is in dire straits for the banksters right now. Okay, I'm talking about physical supply of silvers. Look at slide 2.
All right. So here's slide 2.
Okay, perfect. So Daniel Gotti to the to the rescue again, right? The Because the insiders, right? Like, I mean, people ask me,
Yes.
"Hey, Eric, why can't you tell us the lease rate, silver lease rate, gold lease rate, or the EFP spreads on a daily basis?" Right? Guess why, Jared? I'm not an insider. All this
Well,
stuff,
they
the
also don't
stuff
want you knowing it too.
they don't, and it's bilateral. What that means is that at the LBMA, right? LBMA trades are all bilateral, which means that it's point to point. Okay, two parties, private transactions. If they don't say anything, me and you don't know. That's
Yep.
basically it, right? Like you have the gold and silver fix, sure, fine, right? That guess what? Those are reference prices. Reference, okay? That means those are not the prices that they actually trade on, okay? Necessarily. But when people like Daniel Gatti and Robert Goddard say something, well, wow. well, that's legit, right? That's the
Yep.
real deal. You stay the guys who know what is happening. What are the actual real transactions that are going on at the LBMA? Anyway, back to slide two. So you see that the these rate jump from what? From 1% to 6% within less than a month in July. Isn't that incredible? So what does that
Yeah,
tell you? That means,
that is
yeah,
crazy, actually.
yeah, that's crazy. That means that it's difficult to source physical silver at the LBMA, right? Lease rate is simply just like, how much it costs to borrow silver, physical silver at the LBMA, right? So anyway, that's evidence exhibit A, okay, which is silver slide two. Now let's look at exhibit B, which is slide five.
Okay, here's slide 5.
Slide five. So this information is from the wonderful Bob Coleman. Okay, so he provided
Okay.
that on the weekend. That's the EFP spread. Okay, that's the price differential between COMEX and LBMA. Remember, we talked about this, right? So if
Yep.
the EFP spread is low, that means, guess what? The COMEX price is lower than the LBMA price. Perfect, right? Because they're shorting COMEX, they're long LBMA, everything is cushy, and all they need to do is EFP cash settlement. But
Well,
what happens?
it gives them the ability to justify their narrative.
Correct, because
But
it's all
continue.
paper trade, right? They just do the paper
Yes.
trade. Everybody's happy, right? No physical changing hands, right? When their arbitrage in quotation marks is working properly, right? But let's say, well, right now, what's happening? EFP spread shooting up. That means the COMEX silver price is higher than the quotation marks physical price at the LBMA. What that means is that they're losing the shirt with their, if they do the cash settlements. So they're forced to what? Get physical silver at the LBMA to deliver it at the COMEX. Because guess what? If you do paper settlements, yes, you lose money because the face value, differential, right? But
Sure.
if you get the physical, you don't lose money because the silver is silver, right? 1 ounce of silver is 1 ounce of silver. So they would prefer to get the silver from the LBMA to deliver to the COMEX. But guess what happens if they do that? It makes the situation even worse at the LBMA.
Well,
Makes the
they don't have
situation
enough
even,
either.
they don't
So,
have enough.
yeah,
It just makes it worse because more people want to get physical silver at the LBMA, which means that the free float goes lower. The situation gets more dire, like in terms of physical silver tightness at the LBMA. Now, if we go to slide number four,
okay, here's slide 4.
okay, Boolean stuff. What, like, just basically saying what I just said, right? New York silver is now trading $1 per troy ounce premium over London, the widest spread since the 2020 squeeze. So I'm not making anything up. These are all information from the experts out there, right? We're just gathering evidence to show people that the situation right now with the LBMA COMEX ETF complex, physical silver is real tight. Okay, so we're done with exhibit two. Now we're going to go to exhibit number three, which is if we let's see. It's actually, I don't have the slider, but actually, what happened is Bob Coleman made a post. There's a whole bunch of APs, okay? APs are authorized participants, okay, who try to short SLV,
Okay.
but there's nothing to short. Zero. He never seen that before.
I
Okay,
saw your
why?
post
Why?
on that.
Why? Exactly. You saw the post, right? Why is that
Yep.
important? Why is that important? Because the APs, who are essentially the banksters, okay, when they short SLV, they're actually withdrawing physical silver from the SLV ETF, okay,
Got it. Okay.
and they take the physical silver and they like take it to, let's say, COMEX if they're in dire case of physical silver, but it looks like the custodian, JP Morgan, I mean, HSBC is also a custodian of SLV. Okay, but I think um, JP Morgan has more say. It looks like JP Morgan is saying, no, boys, you ain't going to suck any silver from my milkshake. Party's over. Okay. So, with, exhibit one, two, three, or ABC evidence indicating that physical silver is in short supply right now, I I have to say that it will be more and more difficult for anyone, bankers, nefarious individuals, whatever, right? Whoever wants to slam silver by dumping paper at the COMEX, they will have their work cut out for them going forward. It's going to be extremely difficult and short-lived.
So Eric, so I have a couple questions for you on this.
Yes.
Um, so one question is, I'm starting to see a lot of the online bullion dealers doing spot deals for silver. Okay. So I want to look at this from a retail perspective for a minute for physical. And then I have a question for you on miners. So anyway, most of the online bullion dealers in the last couple of weeks have been doing spot silver. Yesterday AppMex ran a big deal. I know Andy Schectman has a constitutional silver at spot. Um, yes, spot varies by each of these companies, but to me, I'm hearing that a lot more silver is getting sold by retail today than what's being purchased, and we're starting to see a little bit of a flooding there to where you know if you're buying physical retail, this might be a great time to be buying if you're looking at just the premium, not necessarily where the spot price is. Obviously, a couple of years ago, the spot price was way lower, and even just a few months ago, it was quite a bit lower. Um, so I wanted to see if you could talk a bit about the difference between what's going on between the LBMA and the COMEX, and we're talking about banksters here, so to speak, and what's happening in the retail market. Because I think a lot of times there's this belief that if I just go and buy a few more ounces in the retail market, I'm going to be able to help create a silver squeeze. Um, I don't really see it that way. I see it more as participating potentially in a silver squeeze should one happen. And you're presenting a lot of evidence here that says that it looks like it's lining up like the previous one we had in 2020.
Okay. So very good question, Jared. I think the experts out there, the actual experts, right? The
Sure.
bankers, bullion
Yeah.
bankers, they like to use the word dislocation.
Okay.
Dislocation explains everything you just said. Okay. Dislocation. What does that mean? That means okay. So LBMA, COMEX, and the ETFs, they they can't buy any silver. They only buy, silver that is to their specification. Like COMEX bars, LBMA bars, and the ETFs they usually do COMEX bars as well, the ETFs.
Yeah, they're
Okay.
not buying individual silver coins
Yeah,
from
exactly,
someone
exactly,
like me that sells
exactly,
them. Yeah.
exactly. So imagine like, like if you go back to slide one, okay?
Yep.
Imagine those are like the arteries to a in like within healthy organism, right? So when everything is peachy, your silver is flowing from bubble A, like from the LBMA bubble to COMEX to ETF. And then I haven't, I don't want to make it super complicated, but like, the guys you're talking about, the retail guys selling, that's another bubble. Okay. That's
Okay.
another bubble. Like because that's silver that get smelted into, LBMA or COMEX bar form, okay? And then they get circulated in within this ecosystem I'm showing you guys. Okay. So why is there dislocation? Dislocation happens when, like I just said, when these arteries get plugged up. What would cause these arteries to get plugged up? Tariffs, Sarah, right? The
Mm.
threats of tariffs. Okay. So, but why would Donald Trump, like some people ask me, well, like the US needs silver, copper, rare earth, whatever, right? Strategic metals, that's what they call it. Why would Donald Trump, throw tariffs on these things? Is he stupid? Well, guess what? the US, the COMEX, has like, you know, since February has been sucking up the world's supply of gold and silver
Yep.
on turbo speed, right? Like just silver alone, I think, like, if you go to slide 7, you don't really need to go there because it's just a kind of distraction, but like half a billion troy ounces of physical silver at the COMEX registered and eligible vaults combined. Okay? So sitting in the US. So when you, let's say, throw tariffs on top of all this, what happens? Right? Like the regular people, what
Sucking
they see
sound
is
is what
that,
we hear.
yeah, well, the regular people, what they see is that you like it's hard, it's more expensive to import silver. But the
Yeah.
two sides of that coin, right? The other side is that, well, it's more expensive to import silver. What that also means is that whatever silver is in the US already, it ain't going back out.
Yep.
Make sense? Okay.
Yep.
So
And we heard that sucking sound earlier, where from pretty much from the day that Donald Trump was elected, president elect again, it started. And you started seeing the money, the gold and silver starting to return back to New York. And to your point, it's I don't think it's going back. It's here.
exactly. So okay. So basically, my whole point is that, like, the arteries are being plugged up,
Okay.
and the retail silver being resmelted back into bar form, COMEX bar, BMA bar, ETF, whatever, right? That takes time. Plus, if we actually look at the numbers, it's a drop in the bucket compared to what they need, what they're shorting, right? I mean, if someone is shorting 500 million troy ounces of silver in an hour, right? Which is, like we discussed, 57% of the entire world's mining supply
Yep.
in 1 hour. They're doing day after day. Whatever your mom and pop is selling at the pawn shop, it ain't going to cut it. Okay?
Yep.
First of all, it ain't going to cut it. Second, it's too slow. So that's your dislocation. Like, I mean, your your mom and pop, they're dealing with like Rick from Pawn Stars, okay? So Rick is going to give you $20, right? He's going to say, best I can do is $20. That's one market. Make sense? And
Yep.
then and then you have the big boys, right? LBMA, the COMEX, and the ETF. So what I'm saying is that yes, the dislocation is here and it's going to continue.
I
Retail
agree.
is not what we're talking about here, right? So
Yeah, I
that's it.
agree, Eric. And so, as we only have a couple of minutes left here, unfortunately, I wish we had a little bit more time, and we'll definitely have you back on. But one of the points I wanted to make here too is, and just get your quick opinion on this is, I hear people talking about, hey, I'm going to sell my gold for silver because the ratio is above 80, or it's above 90, or it's above 100 or 105. And we were just talking about this at the beginning of the show. Um, or I hear from people that they're just holding on to their gold and they're buying more silver than gold right now. What's your take on where gold and silver are at the moment, being kind of in these channels? To me, I look at this as an opportunity to accumulate more, not necessarily an opportunity to flip from one to the other.
Like I don't
Now
trade
granted,
in and
yeah.
out of, different like these, gold, silver miners. I don't do that because I mean, like I know people who are really brilliant and they came to me, back in March when gold kind of topped at 3,500 bucks, right? Like they, to their credit, they timed it, they called it, they said, gold is going to pull back and consolidate, right? But what they did was they sold all their miners because
Okay.
they were saying, hey, it makes sense that, like, hey, if gold topped and consolidate, miners should dump, right? But the opposite thing happened. I mean, in the last 6 months, miners went up, right? Like, uh, I mean, so I don't try to time it. I just own gold, silver. I own tons of gold. I own tons of silver, physical. Okay. I own a lot of miners and just sit. And it turns out that I'm outperforming all these people. So I don't trade the gold and silver ratio. I don't do that because we have no idea when gold is going to make its next leg up, and we have no idea when silver is going to do so. I mean, they don't do it. Sometimes they don't do it together. Sometimes they do it together, and sometimes they do it one after another. That's
Well,
my
and
answer.
right there, Eric, I think is the key for people to take away from the video too is um, no matter how expert someone is or how much research they've done, we cannot predict all of these things with the surety. We can't. We don't have crystal balls. And to me, I rather be in the market with both gold and silver because I see both of them continuing to go up over the years here than trying to play one or the other and going all in one or going all in the other. You could miss a massive swing, just like Eric described. So for me, I don't do that. Now, I also look at my personal portfolio and I look to see what my ratio is in my portfolio on physical, and I'll do some adjustments there. Sometimes I'll buy more gold, I'll buy more silver. For me, the key is I try to buy what is looking at a good value as well. So, right now, if I'm seeing silver with really low premiums relative to what it's done in the past, to me, it's a good time to pick up some silver. And I look at that with gold as well. And if the premiums start skyrocketing, like we've had a few times, Eric, here in the US, where the premiums on like the American gold buffalo will end up getting into the 7 to almost 8%, which is
Mm,
really high. I try to buy them at below spot if I can, or at spot. If you're buying them retail, maybe a 4 to 5% premium is okay. When you start getting above that, it's getting high. So maybe look at a different product. Um, but Eric, I want to thank you for jumping on here with us. I know it was a kind of a short notice, and then we had a few technical issues with getting the images to work. Um, but is there anything, maybe some last departing words that you want to leave with everybody?
I think just keep stacking, and like Jared said, don't try to outsmart the market. Just do what you're comfortable with, and buy what you're comfortable with, and stick with it. And that's it. Good luck, everyone. And
I
thanks,
agree.
Jared.
Thank you, guys. We'll talk to you soon.